Okay, so as we talked about in the last video, the European Union, the EU, is freezing any sort of trade deals with the USA and freezing any sort of moving forward and effectively, screw you, Donnie, no dice. And what's going on right now is the markets and Trump are both taking a massive dump. So take a look at this. This is first Trump dumping. White House says, buyer beware, okay? Donald Trump, any country that wants to, quote, play games, referring to EU or, well, any country, with the ridiculous Supreme Court decision, especially those that have, quote, ripped off the USA for years and even decades, will be met with a much higher tariff. Wow. And he's got these weird capitalization too. Yes, I do see it. And worse than that which they just recently agreed to, buyer beware. Thank you for your attention to this matter. President Donald J. Trump. Yeah, and the capitalization is all over the map. Like, we're capitalizing tariff, we're not capitalizing play games, but then we capitalize ripped off. Is there any method to this madness? Who knows? He's just taking a dump at his toilet at 3 a.m. in the morning. Then the markets are also dumping. So you have to deal with the Twitter toddler. Tadler President Trump says Dow drops 800 points as AI disruption fears and tariff woes weigh on markets. And it's funny because all the headlines were basically Dow. And this is trolling the Trump people because if you don't know, the Pam Bondi.
The Dow is over 50,000 right now.
And well, not anymore, right? Stock market today, Dow falls more than 800 points on AI and trade uncertainty. I want to go through some of this details because it's hitting multiple companies, multiple stocks, and you got a lot of scares out there. You check in on Trump, and it's like this wall of just bizarre crap. He's talking about the Supreme Court will be using lowercase letters for a while based on the complete lack of respect. So I guess if he doesn't use all caps or capital letters for you, you are in the doghouse, according to Trump, I suppose. He also says here, as President of the United States, far more powers and strength than I had previous to their ridiculous, dumb, and very intentionally divisive ruling. For one thing, I can use licenses to do absolutely terrible things to foreign countries. So I guess he wants to do terrible things to everyone, or worse, as I guess the terrible things. And then he goes on and on about babies of slaves and stuff. I mean, you can read all this stuff if you want. And then saying that everyone else is going to be rich. But the Supreme Court will find a way to come to the wrong conclusion, one that, again, will make China and various other nations happy and rich. Let the Supreme Court keep making decisions that are so bad and deleterious to our future of our nation. And I guess we're capitalizing China and nations, but we're not capitalizing the Supreme Court. And so then our markets are dumping. Of course they are. I mean, how do you operate in this whacked out environment? I mean, the dude doesn't make any sense. It's either his tweets or the stuff he says, or like this weird projects he announces, or he puts a name on crap. You get stuff dumping the most since 2000. So this is like the most in 26 years now. IBM sinks most since 2000 as Anthropic touts COBOL modernization tools. So some of this isn't necessarily directly related to Trump, but it's connected, meaning that it's all in the same market, right? You got the trade fears and the AI worries. This one's an interesting one. I wasn't thinking about this, but it makes sense. So basically, you can update this program and modernize this stuff, and then this would be then a direct hit to IBM. For those of you who know COBOL, I don't think that many people know it these days, but for those of you who work, know the stuff or work with IBM, etc., I'd like to hear your thoughts on this one. But the idea would be, though, this would be a big hit to IBM's core business. It says IBM, or International Business Machines, shares plunge on Monday after artificial intelligence startup Anthropic said its Claude Code tool can help with modernizing COBOL, a dated, that's very nice, but it's true, a dated programming language that is mainly run on IBM computers, shares saying 13%. And mainframe computers, how they refer it. Most of the mainframe computers that run COBOL are made by IBM. So that right there is a major hit to them. Then Anthropic puts out this blog piece. It was pretty interesting. How AI helps break the cost barrier to COBOL modernization. And it was just like a direct attack to IBM. Some of the reasons here, I'll kind of go through this. If you want to read the whole thing, you can, but I'll just read a little bit of the short version. AI changes this. Okay. Tools like Claude Code can automate the exploration and analysis phases that consume most of the effort to COBOL modernization. So what they can do? 1, map dependencies across 1,000 lines of code. 2, document workflows that nobody remembers. 3, identify risks that would take human analysts months to surface. And 4, provide teams with deep insights they need to make informed decisions. So I'll say this: whether or not Claude is great as they're marketing it to be, but marketing wise, it certainly has effect in the market, and they lay out a value proposition there, and so this is what everyone's reacting to, right? U.S. software and private capital shares hit with fresh wave of selling. So you got different various companies. So before, when we were talking about this, it was like scares with Adobe was a big software one, right? Or various financial or tax things. Then you have private capital because there's a lot of leverage in this space, which is pretty interesting. Let me read a little bit of this. You guys some idea of the companies: CrowdStrike, Datadog, Salesforce, ServiceNow, Oracle, right? Someone over in the fund says you really have to question if enterprise software companies can thrive as new models begin to commoditize their business, right? And then you got some of the Blue Owl we talked about before. They were freezing redemptions, can't get your money back. This is like your private capital kind of stuff. And I got to point this out to you also. It says, in the sign of rising concern, redemptions from private debt funds, which are popular among wealthy savers, rose to an average of 4.4% of their net assets in the fourth quarter from 1.6% in the prior quarter, according to Fitch Ratings. So there's a lot of concern out there. You can see it's like they refer to as wealthy savers. We'll just say wealthier individuals pulling their money out of these types of funds. And that's why that's a big deal when that Blue Owl says you can't redeem your money. I think a lot of people are concerned. This is how this stuff works. If the word gets out, hey, time to get your money out, and then it just kind of dominoes from there. And it turns out also with the software industry or market, we want to call it, in these funds and such, there's a lot of leverage loans, right? So it says what the leverage loan market can tell us about the software sell-off. It says leverage loan market is large. Looking at just Europe and America, it has around 1.7 trillion par outstanding, making it larger than either the high yield bond market or the non-business development company portion of private credit. And this is why, you'll see these massive moves in software that I've been seeing. Like various companies will drop 15% a day kind of stuff. There's software and services right there. So this is euro, 30 billion euro. You can take a look at this one. U.S. leverage loans returns, just don't look at software. There's software right there. Okay, so that's 250. No, it is that much? Wow, 254 billion. I thought my eyes were deceiving me. So I guess in the USA, the most leverage is there then, is software and services. Yeah, that's why you're seeing these big, massive moves to the downside. That's pretty ugly out there. Let me show you this also. This is Taleb. He is known for predicting black swan events and is talking about the situation that we're in today. And I'll read some of the quotes here. Quote, someone will make a lot of money in AI. Okay. He says bankruptcies in parts of the software space are likely as technological instability, intense competition, and shifting geopolitical reshape the industry. He also says then tail risk across sectors is structurally underpriced. The tail risk is not a small correction. It is a large drawdown. Okay. The U.S. is progressively losing its status as a reserve currency at the margin. If there's a perception that the assets can be frozen or confiscated, that reduces the incentive to store wealth in dollars. He's just talking about all kinds of problems out there. If tariffs are permanent and clear, businesses adapt, okay? If policy shifts unpredictably, you remove the incentive to commit capital, right? So let's say, for example, Trump decides to, 100% tariffs on everyone, okay, and then keeps it that way. And then you're okay, how do we adjust to that new business environment? But when it's just unpredictable, as Taleb says here, you can't commit any of your money. You can't commit capital, right? Also says he also warned that tariff function as a regressive tax, which we know disproportionately affecting lower income consumers and exasperating inequality, which is pretty much what everyone says. You know, cave-shaped economy, rich get richer, poor get poorer. The tariffs basically is a larger percentage of income among low, and the lower income consumers is how he states it. So some people are affected a lot more with this stuff. And again, it's a divide. He also mentioned this is oil prices are notoriously difficult to predict. He warned that the global economy cannot withstand another 1970s style shock. Yeah, and that's certainly troublesome with what's happening with the U.S. looking to attack Iran. I think by Thursday was the last that I heard on that. And then here's another quote here. That kind of commodity-driven stagflation cannot easily be fixed with monetary policy. You could bring Einstein to the Fed. It wouldn't solve it. And we're just on borrowed time and borrowed money. Supposedly Paramount, this is a related issue. It's been in the news for a while here. Paramount submits a higher offer for Warner Brothers. I say supposedly because I don't even know if Paramount has the money. Like, you can make an offer, doesn't mean you got the money, right? And it's also related, which is pretty interesting, is Uber is acquiring parking app Spot Hero as it moves beyond ride hailing and food delivery. So you're going to see various companies trying to, make moves. I think in this, just going forward, if you just kind of look at what's happening, I think you'll probably see a lot of consolidation in the market, acquisitions, mergers. You'll see some bankruptcies. Say in AI, you'll probably see some companies do okay, right? And then start to eat up market share of the other ones, either fold into the winner or just disappear completely. So I imagine Elon Musk's company will disappear. This one's an interesting one though. Uber taking the parking app Spot Hero. That's an interesting one. I've never used Spot Hero, but I know what this stuff is. So if you guys have used that, I'd like to hear your thoughts on this one. But I certainly could see more of this stuff. And that's what's going on. So I'd like to hear your thoughts on any one of these things. Appreciate your time as always, and I'll catch y'all in the next video.